Yeah, swag. Hi everyone, what's up? What's up? Welcome to CrypoFros channel. My name is Jeremy and I'll be your host for today. In this part of the channel, where we'll be talking about price prediction and market analysis. So today I'm going to delve deep into chart analysis and risk management when taking a trade. We'll be looking at WAXP, one of the most popular and top metaverse coin at the moment, which has also been releasing a bunch of very profitable play-to-earn games that I would strongly advise you all to go ahead and check out, as it can make you a nice and juicy extra income stream. So, delving much deeper into the topic of today. Alright, so risk management is very subjective to one's tolerance level. Some will like to play big on short or long time trades, others more conservatively, only using 1% of the portfolio. So it depends on people, alright? The key element here is to catch the right entries on the smart money concept slash break off structure in P.O.Is retest strategy. All right, so uh, setting up your stop loss as well is another key element that you need to take in consideration very strongly for this strategy. So you need to set it up right below the key point as well that we're gonna try to figure out today. So yeah, let's dive into the chart analysis of today and find some potential trades. So here's the WAXP chart. So as we can see, it's a very recent metaverse coin, and yeah, it's ranked in the top 10 of the metaverse coins as well. So it's pretty cool. Like you can see that it's had like a nice run up. It's been pretty steady. Okay, it's dropped down quite significantly, but stabilizing here, and this was still very early. The metaverse sector as well. So basically, this metaverse coin, uh, like all the other metaverse coin, like Engine, Gala, Mana, Sand, and all the rest of it, they're all creating a set of play to earn games that, when playing them, make NFTs or resources into the game that you can then exchange or swap over for the WAX token. So it's pretty cool to accumulate and to make extra money, because then subsequently what you can do is exchange the WAX token for USDT, USDC, UST, whatsoever, which is basically the equivalence to the dollar. So here we on a daily time frame, as we can see, we're gonna try to draw some lines real quick. So we got a top right here that we can easily see. We got a bottom right there. Okay, so we got a nice little range here. Bottom and top. We can see that let's square up the different little P.O.Is in zone of support and resistance here. You can see that we got a nice little P.O.I here, sell before buy, that is basically creating some sort of demand zone. Another one right there at the very bottom of it that still hasn't been retested. As we can see, this one has been broken right through. And then some levels higher up. So as you go up or down, remember the trend, the market is pretty much creating zones of inefficiency, you know, like these here, like this one right there, where the market needs to go back to and mitigate the gap basically before heading back higher. Okay, so, and a little sell before buy institutional candles as well that are being used by smart money traders to enter and exit the market. Alrighty, look at that. So we broke right through it. Okay, cool. If you were a long-term investor entering in either of these 2 points, then we're gonna zoom in and find like more accurate P.O.Is. But even entering on either of these 2 points would have been good investment levels, because here you can see they kind of like sort of bottomed out here before reversing, so you like found yourself in a slight profit right there, and then you would actually be in profit from the 2 entries you would have got. So then you could expect the price to keep going up. Anyways, let's see what else we got here. So that's to the upside. And then to the downside, these are pretty huge. We got this one right here. We're gonna zoom in to see what's going on in there. Obviously this one here, we got some stuff going on in there for sure. You know, you need to look for the break of structure, you know. So this is a structure right here, structure right here, structure broken by this candle here. Structure right there, broken by most likely somewhere around there. Sorry, my bad for this. So it could also be regarded as a double top, a very powerful retail trading pattern here. And this little structure here broken by this one right there. So it's a bunch of levels that we can see here, a bunch of little P.O.Is that you can use to trade the market. And the last itty bitty one right there. Not the last one though, because this is definitely something here. We're gonna find some nice bottom level here. Okay, so let's zoom in. Let's draw up some levels now. Take off the volumes, use it for that. Here we got a nice candle here. Here within this range. We got that. So remember guys, I just highlighted a bunch of levels here, so I'm not gonna go through all of them individually because it would take too long, but it's just to give you like an insight as to what is the right process to follow to determine where these levels are. But you can just emulate the strategy and just do it in your own time, and just train yourself to do it. And you just maybe even use the same levels and squares that I highlighted here, and trying to narrow down on lower time frames, and just refine the most accurate P.O.Is you can find, and then use them into your trading strategy. So we jumped right down from 4 hours down to 1 hour here. We're just gonna draw up some lines real quick, all right? So we're gonna get rid of that. Boom, boom, boom. Oh, nice little pattern. So we see here, this pattern right there, actually on the 1 hour, is a very powerful pattern. This is another retail trading pattern here with a bearish candlestick. Let me get rid of this shit because it's really cumbersome. But basically, that's right there. Bearish candle down, a little baby in here, a weak down grabbing liquidity and closing up above the baby in green. This one, you see that closing up, you can enter right after, especially once it's in a P.O.I or on a divergence basis with the RSI, correlating to a divergence signal on the RSI. This is a very strong and powerful pattern right here. And sure enough, I would say 70 to 80% of the time it plays out just right about fine. Look at that. If you'd enter here and you aim to the closest POI because you're conservative, for example, you enter here and you exit right there at the bottom of this little POI right here, you'll be making profit, of course, and you could put your stop loss right below this week. So obviously it's going to be a very like the stop loss is going to be very low. So the risk to reward ratio is not as juicy looking, but the let's say the play out ratio of this pattern is very high. So, and that would be the first POI. You could have just took a partial here and just let the trade ride after that, because look at that, like it went, hit it like right away. So you would have had the first POI right there and the second POI right here. Let's draw it up. All right, this little POI, baby POI right here, and baby POI right there. Boom. And we got POI of this last down candle. So if you zoom in more on, lower time frames, you will find some more POIs within this week. However, the real last down significant that we can see down candle before the move up was this one, red one here. But you could narrow it down and find some other POIs over there within this region here. So if you do that trade here, oh my God, look at that. Didn't even look at it beforehand. But you would have been able to enter right there. Up, exit, stop loss right there, and exit right there. Damn, that's a juicy ass trade. Look at that. Boom. Now, first partial here, so profit. Then you'll raise your stop loss all the way up to the green, somewhere there. Once you see that you already hit your first POI, just raise it up, I don't know, halfway through, where to another POI. That would be, well, you see that with this square that we drew up beforehand as well previously. So you get the first POI, so you could expect a little bounce down from here. So if you really want to be super accurate, and then if the market is being bullish and you trust your thesis and analysis, you could use the Fibonacci retracement as well. That could be another useful tool as well to figure out where to the market could retrace down before keep going up. So we got the 38, 20%, 38%, 50%, 60%. So you see that the 60% matches the bottom of the rectangle that we drew up from a POI from the bull run that happened way back. So you could put your new stop loss at the POI here on the yellow line right there. So even if it exits you, if it takes you out of your trade, you exit for profit. So you get profit on the first partial and on the second partial. But here it wouldn't have happened because, as you can see, it hit the first POI right here, went down, not even touching the 20%, and went straight to the second POI. So you would exit it right there. So that'd be a nice profit. Okay. I mean, we just came across this little trade, so let's take it all away, because that was not even the intent initially. I mean, that is the intent to find trades. When I wasn't expecting to find a trade like that fast. I mean, of course, when it does happen, it's kind of hard to recognize it, to find it, because it's scary. The market is actually dropping, you know what I'm saying? Like, So we have the next square down. So if you refine your P.O.Is from the previous bull run, you'll most likely drop some lines on P.O.Is much lower than this yellow line right there. But even if this could have been another entry price, entry point, sorry. But as you can see, the market didn't reach as low as this point here. So when this happens, what you can see is, okay, kind of made some sort of significant low here. And what happened on the RSI? We got some lows, lows, lows. And so you can see that this green here, this green candlestick is in this little consolidation area already put in a slight higher low on the RSI, you know. Okay, cool. There's already a little divergence, so as you can see, sure enough, the market goes back up. Cool. So what's it gonna do next? So now you have a support level here that a lot of people would be using to re-enter, and then you have the key pattern that we'll be looking at right there, developing and folding right here. So these technically goes up and down, and now you're like, oh my god, holy fuck, how low is it gonna go, man? If I enter here, I'm gonna lose a whole bunch of money. If it keeps dropping, it's gonna drop on me. I'm gonna lose all my hard-earned money. I don't want to enter right here, but sure enough, what's going on the RSI? Look at that, high low, divergence there, lower low, liquidity grab right there. Okay, okay, sweet. Liquidity grab, okay, cool. So that's a good sign, liquidity grab. So it signs that the banks and big institutions, they took their money and they're potentially willing and ready to go back up. Here, divergence, so it's nice too, you know. You can see like he's on the chart is creating a downtrend. All right, nice little downtrend like that. Slight downtrend, almost like an equal lows. But here on the other hand, on the RSI, he's clearly creating an uptrend with 3 touches, even 4 touches on the uptrend. So when all that happened, we already found ourselves right there because we're waiting for these to play out, potentially for this pattern, and winter in here. So we're already there. So basically there ain't no need to shit in our pants no more. We just need to enter here. And like I said, set up the stop loss right below this point here. And from this point forth, you just wish for the best, all right? But most of the time it plays out just fine. And yeah, so you get I made money here. Let's zoom in a little further and see what we can see here. All right, so we got a nice little line right here. So this is the last sell before buy candle breaking, obviously fueling the impulse move, breaking the structure right there. Okay, cool. We got two actually, one here and one here, but this is the bottom one, and we can see that there was already a lot of divergence signal right here. So you could expect the price to come back retest this level here, but also it's an early drop, an early bottom. So you'll be like, man, most likely there's going to be a liquidity grab on the next drop, which sure enough it happened. However, had you entered right here, so had you entered right here and your stop loss right there, you would have been exited. So that's the problem, that's the trick here. But if you entered right here on a long-term investment basis with no stop loss, that would have been a very, very nice entry. Because you see, you would have grabbed the liquidity down, hit it higher, and you would have had the perfect entry right there, right in the consolidation. Almost instant profit. So we had another POI to look for right around this area, right? What do we got here? Something around there. Look at that. Right here. Juicy. Look at that. Accuracy, man. Accuracy. So we got a next POI up right here. So this is gonna be a sell POI. So some people would be shorting the market from here, putting their stop loss right above it. So let's try to take a look at what it could be, because we haven't reached that far just yet. And the market price action has been unfolding quite nicely so far. So we got a nice POI up, so we could expect the price to come all the way up and hidden. Then if you're a little bit more conservative, or you're only using the 1 hour time frame, you see, like, you can see that there's another little POI right there. Like, this is a bottom POI. The bottom up is sell before buy POI, you know, like definitely breaking the structure down. But I mean, the very, very last up before the drop was around there on a very, you know, on a narrow down time frame. But you could still use this one POI, still valid. You use one of these level or both levels depending on your strategy and what you're looking at doing, right? To short the market. Say for example, we are aiming to short here, and we are aiming to not go too crazy on it and to exit right above these levels right there. You know, there's little 3 sets of tops here. Don't want to get taken out by your liquidity grab. And all the way down to where, well, to work out how low your target should be, you've got different ways. So this is the kind of like the lowest. Now the lowest POI we worked out so far to the way down would be this one right there. You know, like once you're using the 1 hour time frame, you don't want to be too greedy sometimes. You need to be realistic as well in your targets, you know. So you can use this one here. Then again, if the market were to be bullish now, you got so many factors you need to take into consideration. Say for example, this would be the top of this move. So we'll be looking at where is the market going to pull back down from from this point up. All right, so we'd go okay, 50%. 50% would be here, correlating to this POI right there. So let's take that out. If you are a little bit hesitant, or if you want to take partials out, you could take partial here, first partial on this POI, second partial on this POI, and then third partial, you can let it ride all the way down, like further down, for a break down of these lows, you know, for next level down. So you'll have 3 take profits, for example. But for now, we can see that the market just trying to go up. But remember, when the market goes up, it means that you need to look for shorts, because when it goes up, that's when you're taking profit. When it goes down, that's when you're buying. All right. See right there, from here to here, lower low, low, lower low, and the same pattern as I talked to you about earlier on, forming right there. So this is the beginning of a potential big move. So I think it would at least go there, but you could even go higher, you know. And here you can see confirmation, like high lows, low low, low low, low low on the chart, and then on the other side, high low, low, high low, high low, and boom. So now we've been taking a look at this very specific range, but like I said, all these different squares and rectangles that I drew up earlier on, They are basically accommodating P.O.Is, all right, important levels to keep an eye on. You see, like, there's some P.O.Is right here. Like, this is the breakup structure right after that one. But if you narrow it down to a, smaller time frame, you would find some P.O.Is in this little week right there. Hopla, boom, right there. You would have the first P.O.I right here. You could work out another one here as well, for partial taken. First exit, second exit, third exit, first short, second short, third short. Out of the three, one is gonna work out. And if it doesn't, well, bad luck, man. You lost money, basta. But most likely you'll make money. If you lose the first trade, you lose the second. Well, the third one's gonna make up for the first two ones. No big deal. Yeah, 4 hour. Look at that. Juicy POI right there. Alrighty. Look at that. Man, you can be sure that the market is gonna, yeah, 91 cent, 07. Damn. You can be sure that when the market is heading back up, it's gonna hit this POI and bounce off downward from it. I don't know how low, and I don't know how long it's gonna stay below this level 4, but there's a good short and profit taking right there, because even if you enter right now in the market, knowing that the market is way down, you wait for this level, you exit at this level, and then you wait for the market to retrace down, and then you re-enter, boom, that's profit right there. All right, guys, let's wrap it up for today. This is a wrap. If y'all got any value from this video, do not forget to like, subscribe, and comment. Also, turn on the notification bell to be notified whenever a new video gets posted. Leave a comment below if you have any suggestion, or if you need to develop more on this. If you need me to develop more on a specific part of the video, terminology, or anything else, do not forget to share the video with anyone you believe would be interested in knowing more about trading in general, or crypto as a whole, or simply just get value out of it. All right, so on this note, you guys be safe, make money, and see you on the next episode. Peace out.
Talking about, crypto.